why you need to understand your own tax planning. That doesn't mean you have to do the taxes, prepare them yourself, but it means you need to know what's going on. And I highly encourage people to hire CPAs and whatnot, absolutely, especially if you're running small businesses. But if you don't understand your own tax planning, you are going to be going into a buzzsaw, because the states that you live in certainly understands it, and they need your money desperately. So don't forget to subscribe down below at the Heritage Wealth Planning. As always, if you like what you see, thumbs up. Give me a thumbs up if you like my Patriot shirt. Don't give me a thumbs down, because YouTube doesn't like thumbs down. So thumbs up or no thumbs up, or just thumbs up if you like the video. And we'll assume that means you like the Patriot shirt. Just joking. But anyway, all right, so here's what's going on. I was not that long ago, a few years back, I was working with a hedge fund guy who was in Manhattan. He was making big bank, and why these guys make big bank, I don't know, but whatever. It's it's nature of the beast. These guys pushing paper from the left to right make $20 million a year and $30 million a year. It's nuts. But be it as it may, that was his world, and I'll never forget it. He had accumulated a bunch of money. I said, "Man, you're going to get killed estate tax." I'll never get his response. He kind of paused. He goes, "Why? The state's going to take care of it." I said, "What do you mean the state's going to take care of it?" He goes, "They'll make sure we're okay." And I was stunned. I was stunned by the sheer is not even just ignorance, it's actually arrogance. I mean, I was like, huh? What? And this guy had a couple of young kids, a wife who's obviously significantly younger, if you know what I'm talking about. And I just stunned by this. I said, okay. And so anyway, the point is, every state is in desperate need of your hard-earned money, and they will do whatever they can to separate you from your money. That's all there is to it. And I'm going to share an example, how this happened in New York State. And I know it's mostly the Northeast and the West, the Oregons of the world and whatnot. Even Washington State is always trying to get an income tax in, sponsored by Bill Gates and his dad. The rich guys always seem to want the poorer people to pay more tax. Obviously, weird to me, but be it as it may, never mind California. But at the end of the day, if you don't understand your own tax stuff and you're expecting your CPA to tell you in advance of you making a transaction or doing something, you're leaving yourself up into a world of hurt, because this guy has CPAs. And I'm still amazed. I was stunned. But anyway, so let's dive into this. I'm going to share with you an article. This is from 2011, and then I'm going to share with you a resource where you need to sign up, because this guy's resources, and I don't read it nearly as much as I used to. I used to read this guy's stuff all the time, but you need to sign up for it to understand your own tax planning, your own estate planning. This guy has a nice little blog, webinars, blog, the whole thing free of charge, and he's wonderful. So here's an article by Edward Zelinsky from June of 2011. It says, New York's irrational income taxation of non-residents, the Barker decision. This will blow your mind, my friends. And so let's read who Zelinsky is. I think they tell us who he is down here. Right here. Edward Zelinsky, or at least was, the professor of law at the Benjamin Cardozo School of Law at Yeshiva University. He's the author of The Origins of the Ownership Society, How the Defined Contribution Paradigm Changed America. Again, this is 2011. I don't even know if he's still alive. Don't know anything about this guy, but I remember reading this article many years ago, probably in 2011, based on this tax law decision that came down the pike, which I'll share with you here in just a second. All right. So he says, I may be losing my status as a poster boy for New York's irrational income taxation of non-residents. The recent decision of the New York Tax Appeals Tribunal threatens to bestow this dubious honor on Mr. John Barker. All right. As a law professor, I routinely commute from my home in New Haven, Connecticut, to Manhattan, where I teach my classes at Cardozo University. On most days when I don't teach, I work at home. Modern technology allows me to research and write at my residence in Connecticut while staying in touch electronically with my students and colleagues. Giving its obvious benefits, such commuting is blossoming. On days when telecommuting non-residents like me work out our out-of-state homes, New York takes the irrational position that we are really working in the Empire State, though in fact we are outside of New York's borders. By the legal fiction known as the convenience of the employer doctrine, New York assesses income taxes for non-resident telecommuters work at home days, even though we do not set foot in New York on those out-of-state days. New York's convenience of the employer doctrine typically results in double taxation on the days non-resident telecommuters work at their out-of-state homes. When I challenged New York's convenience of the employer rule as unconstitutional, I found myself in a prolonged and public controversy over New York's irrational taxation of non-resident telecommuters. I ultimately lost my case into the New York's highest court. John Barker of New Canaan, is it Canaan? I always forget. Canaan, Connecticut now finds himself enmeshed in an equally convoluted controversy about New York's self-destructive tax policies vis-a-vis non-residents. Mr. Barker was an investment manager who commuted regularly from his home in New York, or New Canaan, that's what it's called, to his office in Manhattan for the years in question, 2002 through 2004. During these years, Mr. and Mrs. Barker had 3 children. When not working at his Manhattan office, Mr. Barker was deeply involved in community activities, and Miss Barker was a full-time mom, raising the Barker children in the Nutmeg State. New York concedes that the Barkers were domiciled in Connecticut during those years. Nevertheless, New York insists that the Barkers were New York residents and owe a second New York income tax on their investment income by virtue of their modest beach house in the Barkers' own Napbeag, New York. The Barkers used this house for short, sporadic vacations. In 2002, for example, they used their small beach house 5 times for a total of 19 days. Mrs. Barker's parents used the beach house more regularly, both during the summer and throughout the rest of the year. As a Connecticut resident who worked in the Empire State, Mr. Barker filed non-resident New York State income tax returns and paid New York State income taxes on the compensation he earned in Manhattan as an investment manager. On audit, the New York's Department of Taxation claimed that by virtue of his beach house, where he only stayed 19 days out of the year, he was a New York resident and thus owed New York tax on his investment income as well. Since Mr. Barker was a Connecticut resident for these years, 2002 to 2004, he properly paid Connecticut income tax on his investment income. New York, asserting that the Barkers were New York residents because of their modest and little-used vacation home, saw a second state tax on the Barkers' investment income. The New York's Tax Appeal Tribunal recently sustained this double tax, even though the Barkers stayed at their New York home for a handful of days each year. That's it. The tribunal let the department tax the Barkers as New York residents by virtue of their minimally used vacation home. The Barkers are not New York residents under any reasonable understanding of the term. They simply do not live in New York. Nevertheless, the Empire State taxes them like they do. Mr. Barker should pay New York taxes on a salary he earns in Manhattan. There's no rational basis for New York to tax his investment income because he's a Connecticut resident. The economic fallout of the New York's convenience of the employer doctrine is self-evident. Non-resident telecommunicators sever their ties with to the Empire State to avoid double taxation. Blah blah blah. All right. So basically, what was going on, and I'm sure it's still the case. So what does this have to do? Because if you look at the New York, not only the income tax for non-resident people, but the estate tax as well. All right. So I'm just telling you right here, New York State has its own pretty onerous estate tax as well as income tax. And for the unsuspecting, just middle-class people who don't pay these highfalutin law school professors and whatnot, you are going to get sucked into it. It's not just New York. All these states are going to have issues like this. Every single one. When I lived in South Jersey, I commuted into Philly. I had to pay the Philly wage tax. Not really a huge deal because I was able to deduct it off my New Jersey taxes. But at the end of the day, what if I lived in Pennsylvania and I had a small house in New Jersey? How would that affect my estate tax at my death? All these things you need to know. What if you, just as the list goes on and on and on. So anyway, that was nuts. There's just no other way around it. So let's go to a place you can go. Now, again, this is 2011. Here's my man, Martin Schenkman. Martin Schenkman. He's out of Parsippany, New Jersey. He's huge. I've been following Schenkman for a long time. He's got all kinds. He's got his newsletters free. A blog is free. All kinds of webinars. Just tons and tons and tons of stuff. How to ruin your estate plan by signing a stupid standard form. Estate planning New Year's resolution by an estate planner. Estate and financial planning regulations for New Year's Eve. Schenkman is just a man when it comes to estate planning for sure. And let's see if he has the firm. Let's see if he talks about. So just here he is, CPA. So he talks a lot about financial planning. A PFS is for CPAs who are financial planners. So they use their version of the CFP, but they call it PFS. So he's a CFP, but because he's a CPA, they don't call it a CFP, they call it PFS. And he has a Juris Doctorate as well. So he's a CPA, a CFP, and a lawyer. So what Shankman writes about is just incredible stuff that's easy to read, not legal jargon, but just tons of stuff on here on various estate planning and taxation and financial planning that you really need to follow for sure. I cannot tell you enough how good this guy's stuff is. I didn't realize that a podcast. Let's see. That's fantastic. Oh yeah, man. Look at that. All kinds of, oh yeah, sweet. I did not know that. I have to sign up for that. So again, I haven't followed him that long for recently. I just haven't, but he's got this blog. I used to download this newsletter all the time. His newsletter is just fantastic. So many estate plan fails. Will yours? Estate planning is a new ballgame. Heckerling, which is down the University of Miami. They do this Heckerling every year estate planning conference, which is a pretty big deal. It's just tons and tons. And healthcare COAS, is it alone? I'm not sure what that is. Anyway, tons of stuff. I saw decline of charitable giving, returns of traditional 60, just tons of stuff on this guy's post. I'm telling you, man, change CPI, consumer price index. I mean, you think I do a lot of stuff on YouTube. This guy does a lot of stuff by the written word, and he's got webinars too. Highly recommend you sign up for this guy's stuff. Let's just go to, I don't know, financial estate planning in general, see what we got. It's Shankman, what is it? Shankmanlaw.com. Estate planning and charitable giving. Yeah, look at it, 2018. ING's extraordinary planning tool to reduce income tax, even those for, is that ING? Like ING? Oh, that's interesting, because ING was the big insurance firm. ING's extraordinary planning tool to reduce income tax, even those in income tax-free states. Interesting. So lots of good stuff in here. Hot topics for a hot summer. Johns Hopkins, All Children's Foundation. So just, I mean, tons of stuff, man. Tax Cut and Jobs Act, impact on estate planning, ancillary planning. So anyway, when you read stuff like this, and this is how I came across this article, by reading Shankman, because back in 2011 in his newsletter, he talked about that. And I said, this is nuts. And that's when I was assigned at that point with my firm to New York City. So most of my clients were in New York City. Some were around, that area. A few were out in the upstate, but the vast majority were in New York and then northern New Jersey. And I said, I could not, I was still stunned at that point, how insane the New York law was. And then, you can read various celebrities who flee New York to get the heck out of Dodge, because they're like, look, I'm not paying you guys. You guys are corrupt. And it's true. I mean, again, Cuomo, look, I don't like the guy. I'm not going to lie to you. I don't know what he's done to make it more tax favorable. I just don't know. I literally don't care. I don't pay any attention to it. But at the end of the day, if you don't know, and you're a resident in New York, a resident in California, a resident in Washington, or a resident in New Hampshire, any of these states, New Hampshire and Washington, both are income tax free. But are the other things tax free? Capital gains in New Hampshire, Washington has high property. I mean, that whole stuff. I mean, you just got to know what's going on. It's up to you, because your CPA, your financial planner, your lawyer are probably not going to be on the horn with you saying, hey, don't, I don't know, you need to sell your house, your small beach house in Long Island, New York, because your Connecticut resident in the state of New York is going to think you live there. It's probably not going to happen. I mean, it could. I mean, I was doing that, again, going back to my hedge fund guy, and he's like, whatever. I said, dude, you're nuts. But anyway, I hope this helps. As always, I'm just trying to give you good stuff to look at. Shankmanlaw.com, Shankmanlaw.com. You just got to know me from Adam. I'm connected to him on LinkedIn. We probably traded emails a few years back, but on that, we don't know each other. But I just love his stuff, and you should go on there too and gobble it up. I think you'll get a lot out of that. All right, we'll see you guys next time. Subscribe, thumbs up, and then, of course, put comments down below. Thanks, guys.